The 5 reasons why alt season is postponed. Despite the White House coming out and saying that wages are keeping up with inflation, the majority of consumers that are living paycheck to paycheck do not feel the same. In fact, research shows that the majority of these consumers can't afford nearly anything due to the fact that the essentials, their needs, are going up so much. This includes rent, utilities, and groceries. Now, there is a light at the end of the tunnel. I'm going to talk about the altcoins that I'm personally accumulating because I believe we are truly living through a monumental shift in our economy. We're going towards an era of tokenization. There is going to be momentum back in the crypto markets. But before we get there, we need retailers and consumers to be able to actually afford the marketing set forth by all these venture capital firms. You see, all these altcoins, your favorite altcoins, the majority of them, besides Bitcoin and of course Ethereum now because they have spot Ethereum or spot ETFs and are institutionalized, they're going to be reliant on a lot of retail volume coming from the marketing from these VC firms. Now, happy Labor Day, everyone. We are obviously taking the morning off, but we got TJ, Kelly, Tim. We got the whole team here helping redesign the studio because we have new content coming out for you guys. Not only are we, of course, still focusing on crypto and your altcoins, but we're definitely diving a little bit more into the macros, which we'll be using this new board for exclusive content here in a new studio. And this is going to be specifically so that way we can cover Fred with all of the economic data being, given out in terms of the retail audience. Our focus is retailers. We're the ones that are looking to accumulate. We're the ones that are looking to make money off these markets. And at the end of the day, guys, we say this time and time again, no one's here to hold a crypto forever. Hodling is what wrecks your portfolio. Unless you're holding Bitcoin and some of you for Ethereum, a lot of these altcoins, they're going to be narrative plays, whether it's AI, whether it's DePIN, whether it's going to be Web3 gaming or metaverse plays. You're going to be constantly rotating. And of course, to see those rotations, we need liquidity. When you see articles come out like this from a TD Ameritrade, it is not going to be the most bullish article in terms of consumer spending. I mean, over a third of Americans are feeling the pain from inflation and are now focusing on cutting back spending because while consumer sentiment or consumer confidence might be up, they're still spending. They're spending more on utility, more on groceries, more on gas. And this means it's going to be a lot less liquidity entering the markets for crypto and risk on assets. And the consumer confidence remains high, which of course shows that we do still have spending, which means we're not going to be necessarily in a recession that people were trying to predict, like the Great Recession of 2008. But it does show that they're confident the Fed is going to start reducing interest rates, making money easier. That wage growth is going to outpace, of course, inflation. And these are all things that will round out that bottom on the personal savings rate, as you can see here. But until that happens, we're stuck. And I don't see enough data in the economy to show that the Feds are going to pivot by a 75 basis rate cut. We're more than likely going to see 25 basis points followed by another 25 at the following event. And the reason for this is because how consumers are acting with specifically credit cards, where the average American has 3 different credit cards, has pretty much maxed them out and are living on programs that are buy now and pay back later. Now, most financial gurus will tell you, credit cards a bad thing because it incentivizes you to go buy luxury goods or that brand new TV. But the reality is, since COVID-19, consumers are actually using credit cards for their basic needs: groceries, utility, rent, or what's actually the number one expense in the United States economy, which is going to be medical expenses. Yes, people put their medical expenses on their credit cards. Or is going to be one of the main issues in our economy and something that everybody should be taking to the polls in November, but is going to be energy costs. Energy costs are up so much and they're not slowing down. We need to drill more. So there are a lot of signs in this economy right now that show we can actually have someone off a soft landing. I think it's going to be a lot harder than the Feds and the White House like to make it to me. I think it's going to be a lot less than the fear mongers on YouTube like to make it seem. Oh, the great housing crash. Oh, sell everything now. Go into gold. Buy my 14th edition of my gold standard book because I've been claiming that the market's going to crash since 2008. The reality is, guys, I think it's going to be somewhere in between the middle. And I think we're already in that bottoming phase. But that does not mean altcoins can't see another 30, 40% dip. It also doesn't mean that we can't see a 30, 40% pump. In fact, historically, if you guys watched the previous video on this channel, I explained how every time the Feds seem to pivot or cut interest rates, in 2008 specifically, which, yes, there's a lot of similarities. It's not all the same. Markets tend to rhyme, not always necessarily repeat themselves. But it actually was about a few weeks after the Feds raised or cut their interest rates that we saw a peak in the market before downside action. And so we might see something similar on. We might not. We might just continue to trade sideways. Maybe we go back down to $40,000, $45,000, or maybe we do go back up to $70K before we drop down to what I believe is the most likely scenario. So go check out that video. But we're at a point where we need energy costs to come down massively. This is number 4. If we start drilling more, if we start creating more energy within the United States, becoming more energy independent, it's not only going to drive down the costs of things like gas and of course your utilities at the home, but it's going to lower the costs of all supply chains. So your groceries, food, everything are going to obviously still see an inflated price, but they might come down at the store. And in fact, this might actually allow wages to outpace inflation by a decent amount. And we need that for a few consecutive months. We need consumers to be able to make more based off their income against inflation so they can start saving, so they can start feeling confident, so they can start splurging and not just buying things that are just basic necessities, but rather start investing back into the economy. Reason is simply going to be an accumulation of all these reasons, but is of course consumers living paycheck to paycheck. This chart right here is one of the most important charts you'll probably ever see in the financial markets. Roughly 65% of Americans are living paycheck to paycheck right now. There's Americans that are making 6 figures that live paycheck to paycheck, because while some people might believe 6 figures or $250,000 a year might be a lot of money, when those individuals live in places like New York or San Francisco or Los Angeles, $250,000 is literally enough to live paycheck to paycheck. They can't even afford to save. And what's awesome about this chart is notice when it both peaked and it bottomed. It peaked in November of 2022, which so happened to be the bottom of Bitcoin's price. Now is the time to simply focus on accumulation. You can see on this chart as well that I do believe we're about to peak in the same regards that we peaked in November of 2022. The difference this time is we're waiting on not only energy costs to come down, we're waiting on the feds to pivot. We don't know if they're going to cut interest rates by 25 basis points. It does seem the market believes that. But if that's the case, it could be a few months of sideways action, a few months of breaking between 55, maybe in 65K. Maybe we get anticipation and hype with good economic data points this month that leads us to a $70,000 Bitcoin around the time of the FOMC meeting with the cuts. But will that be enough to actually bring back that consumer confidence? Is that going to be enough for consumers to look at the everyday market and say, you know what, there's actually enough money here for me to not live paycheck to paycheck, but rather focus on investing and diversifying my money, splurging on vacations and these type of things? Because as it stands right now, over 70% of the market believes that restaurant prices, gas prices, energy costs, food costs are going up across the board. And as long as the majority of the market feels that way, that means consumers are going to be less reluctant to spend a good majority of their money. The money they do spend is, again, going to be on the higher costs of these goods. So we are in a very pivotal moment in these markets right now. I think people, as they get bored, they're going to leave the markets. People are going to start saying, crypto's a scam for the 100th billionth time in their lifetime. And they're just going to watch this rinse and repeat. And I'm going to keep you guys up to date with this as we build out these studios, because we get to see behind the scenes. We get to see what the VCs are doing. We get to see what all these companies are doing when they spend on marketing. Are they holding back? Are they going to postpone their campaign? Are they going to move it by 3 months, which is the case right now? The majority of these companies that are in talks for sponsors, that are in talks for, getting connected to KOL groups and large teams, they're postponing all of their marketing initiatives by 3 to 6 months. They keep delaying their launches. They keep delaying their ideas. And this is because they're waiting for that consumer sentiment to change. They're waiting for consumers to be able to start spending money again. If not, think about it. It's very simple logic, guys. These companies are going to invest millions, if not hundreds of millions or billions of dollars into marketing across the board. Right? They're sitting on a lot of cash. A lot of these companies have a decent amount of cash saved up on the side. If they were to deploy that now, who's going to buy their product? Who's going to sign up for their subscriptions? The answer is nobody, not until that consumer sentiment shifts. So we are at a pivotal moment, like I said. The products I'm going to be accumulating are the ones that I think are going to dominate the best. That's, of course, Bitcoin and Ethereum. You guys might be rolling your eyes, but the reality is this is an institutional game, guys. This ain't ICO craze 2021. This ain't ICO craze 2017. This ain't the black market from 2013. This is now an institutional game. So if you don't have the exposure to Bitcoin or Ethereum, you're going to get left behind. The last 3 to sum up are going to be Ondo, Chainlink, and of course Solana, which is another institutional favorite. Be sure to comment what you're accumulating and turn on those notifications so you stop missing out. See you in the next video.